going to be discussing a brand new $10,000 investment that I have made in a particular stock, and it is another one of the SPACs, or special purpose acquisition companies.
Today, we're talking SPACs. Ladies and gentlemen, it seems like everybody and their grandmother lately wants to get involved in these special purpose acquisition companies. And the ones we're going to focus on today, of course, we're talking Hyliion. We got that Nikola. And then the most interesting of the bunch, in my humble opinion, is the golden Nugget. I want to break down some of the risks associated with buying into these SPAC plays that most people just aren't aware of. I'm going to break down for the reasons why I will not be buying into any of these companies. And then finally, in the clarity of my transparency, I simply ask that you hit that motherfucking like button, and let's get right into this. Investors alike. Before we get into these individual stocks and kind of my opinions on them and some really fascinating news, I don't think people fully grasp, and I don't even fully grasp, the process behind bringing one of these special purpose acquisition companies to the public market. But Wikipedia gives it a really simple definition, saying sometimes called blank check company is a shell company that has no operations but plans to go public with the intention of acquiring or merging with a company with the proceeds of the SPAC's initial public offering. And I'm finding these things very convoluted because they seem to be in the best interest of basically the company, the CEO, and the initial investors into the company, not the people that are buying into it after the fact. I'm going to explain more about that later. And as we break down these companies, I'm going to reference back to this to show you some of the benefits and the cons, because one of the best benefits is you don't have to be in the angel round of investing. If you've never heard of angel investing, before companies will go public, we'll do a pre-capital round, but you will never be able to get involved with it unless you are a accredited investor, which means you basically have just $1 million lying around, or you're consistently making six figures every year, which isn't most of us. So there's some unique benefits to these, but more importantly, guys, let's just get right into these companies, starting with Nikola, and why I believe that the EV market is heading into some major bubble territory. And I think I'm not the only one starting to recognize this, is Nikola, by Trevor Milton himself, said the company was probably worth about 10 billion, but at its peak was worth about 27 billion. Today, sitting at around 18. And I'm going to get into some of the finer details here, but I just think it's funny because everybody did this with Tesla in the early days. And keep in mind, Tesla almost went bankrupt trying to get their manufacturing off the ground. And this is a company that hasn't done any revenue documented yet. So keep that in mind. But right now, if we were to compare that to, say, the Ford Motor Company here, guys, Ford's only worth 24 billion. So at the peak, Nikola was worth more. GM only worth $35 billion, guys. These are massive brands, manufacturing facilities, and just auto cars that expand in many different markets. And Nikola hasn't even gotten off the ground yet here, folks. And I find it really interesting if we're talking about the hype train and why it's going to be burning out real soon. I think this is a catalyst to send the stock to the downside, and that is the simple release of their Nikola Badger. What I'm showing you here is the Google Trends on the hype difference between the Cybertruck and the Nikola Badger here, folks. Now, this is a 12-month trend because you might remember back in November, Tesla released the Cybertruck, which was explosive, like just stupidly explosive. The entire world was hyped about it. But if we go into the last 90 days since the Badger has been released, this hype can't even compare to the fact that the Cybertruck, even to date, is still more popular than the Nikola Badger. And I think Nikola is just not releasing the Badger sales numbers because they know they're going to lackluster at best. And some of the other really crazy things to me, guys, is that we're living in the midst of a pandemic where automakers are in one of the worst times they've ever been in. Yet these companies that make zero revenue, that are promising these absurd futures, are just skyrocketing. And the interesting thing about it here, folks, is an investor that's buying a company that makes zero revenue. I always find it real interesting when you watch the CEOs flat out go and spend $32 million on a house in a bloody, what could end up being a full-on recession here, folks. I mean, we're getting all glossy-eyed by the fact that these stocks keep going up, and they're basically being traded like, you know, baseball playing cards, and right now they're just the hot ones. It doesn't make sense for a long-term investor. Now, if you're looking to day trade or swing trade, I think it would make a lot more sense. There's nothing worse than in the midst of hell when a company just goes public, is just trying to get profitable, and you know, the CEO's like, I'm gonna kick it back. You know, these shareholders dumped 32 million. The cool thing is my house doesn't disappear if the stock price does. And I think it's really funny because now investors are comparing this to like Nick Woodman from, you know, GoPro when he was buying yachts while the company was just burning away and he was just getting rid of his shares. And I think there's another lady that everyone's comparing Trevor Milton to, which is the Theranos lady, Elizabeth Holmes, which is facing a 20-year jail trial actually this year. And if you're not aware of this story, folks, Theranos founder Elizabeth Holmes faced jail time for fraud charges. She basically was somebody that came up with a new way to test blood, and they made these little devices that we're going to basically be able to use in shopper drug marts, drug stores, food stores. You don't have to go to a doctor to get blood drawn anymore. You can do immediate blood tests to only find out that, yeah, you know, a little prototype doesn't represent full scale. And she lost investors up to $72 billion here, folks. Kind of just rolling through a hype train. And I don't think you can compare Trevor Milton to this lady. I mean, that's a far stretch and a half. But at the end of the day, guys, you have to be super careful with these kind of companies, especially when they're going public. Now, let's talk really quickly basically about SHLL here, which SHLL is the acquisition company that is going to be taking on Hyliion. Now, I've already got a bad taste in my mouth from Nikola because, again, guys, with these acquisition companies, it's fast tracking to the public market. And the idea here is Tortoise Acquisition, the people that are making the initial investment, which I think for Hyliion here is like a few $100 million. And I mean, at the end of the day, that's their initial dropped investment, which they paid a heck of a lot less than you are. And when they take this thing to public, guys, they know they're going to make a stupid amount of money, and that's when they unload their shares into the hype train. I mean, you could almost say that Trevor Milton's kind of doing the same thing, but I'm not going to push it because then we're talking about legal stuff that might not be true here, folks. But let me talk a little bit more brightly about Hyliion, because I know I've been really battering these companies, but these are the true realities you're facing as a long-term investor here, folks. Now, Hyliion I find a little bit more interesting because currently the acquisition company right now is worth about $743 million. Now, Hyliion is essentially doing the exact same thing Trevor Milton and Nikola is, but they're doing it through natural gas. And essentially, they're all using battery technology, but motors that use cheaper fuel, whether it's hydrogen, whether it's natural gas. And the fun thing about this is they are already well ahead of the gate. They have trucks that are going to be coming out much sooner than Nikola. They have a bigger infrastructure because natural gas has more refueling already spread out across many different countries. And it's going to give them a huge benefit. But what I want you guys to keep in mind when you're buying into these companies, these are the most risky companies you can buy on the planet. And the reason they are is they are ideas that haven't been actually proven to generate cash flows yet. And we're looking all the way out into 2024. So I want you to keep in mind here, folks, that the company's already worth $743 million, and they don't plan on profiting $737 million until 2024. And this is just projected, presuming that everything goes right along the way. And I still think that Hyliion has a way better chance of getting anywhere compared to Nikola, because I don't think Nikola should be focusing on Badger, their truck, or their little Sea-Doos, considering the tractor trailer market is the majority of their focus here. But as a long-term passive income investor, if I'm being honest, these stocks seem more like day trades or swing trades because they get overvalued so fast, and it is going to take Nikola a decade to prove their $20 billion valuation. And it's going to be the same thing with Hyliion, though I think Hyliion is much more reasonably valued, because if they can get to that 700 to $1 billion in revenue in the next 5 years and continue to achieve that, I would honestly think that the stock's probably worth a lot more than $737 million. So from a long-term investment standpoint, obviously this company has the hedge. Before I explain to you guys why I'm just not a fan of buying into these pre-acquisition companies, I'm going to touch base on the golden nugget, because that one's going to sum it up very nicely on why these are really sketch companies. Because these CEOs, guys, are trying to get quick public market money. And in the hype train that is the EV market right now, it is very easy for investors to get glossy-eyed over by the quick returns. That doesn't equate any real value as the asset here, guys. We're losing control of the actual underlying business and only focusing on the stock price and getting too hyped into this. So if you're getting into these, you need to have an out plan. You need to know, I'm getting in at this price and I'm getting out at this price. It is something that I did with the MJ market. This could be comparable to the dot-com bubble. It could be comparable to when MySpace, Snapchat, Facebook were all competing here, folks. I mean, Instagram, they lost because Facebook bought them out. At the end of the day, there's only going to be a few winners in this games. And as I tell you guys, I base my entire investment philosophy on by finding the top companies in a weighted industry and only buying the top 1 or 2 companies. I did the same thing in the utility sector. I only bought Northland Power and Southern Company, getting a great return. I only bought Tesla Tesla because it's the only one that had a leading edge when I was buying it. But keep in mind, I wouldn't have even bought Tesla 2 years ago. It took them up to actually proving some form of profitability and some form to, eventual scale before I would even take on that risk. I'd still rather pay a premium when these companies have proven something to get into them than be the person that has to gamble on whether they can actually succeed at that or not. But nonetheless, folks, let's get into the Golden Nugget and one of the most interesting things I have ever seen in my life. So Golden Nugget, Las Vegas, another place that is just utterly disastrous right now. All the casinos are basically, they're sending out letters of permanent layoffs that are coming in August and September. Cirque du Soleil's finally declared full-on bankruptcy. So when you go back to Vegas next year, guys, there's going to be a whole new redesign of shows as performers haven't gotten paid. They have $7 million in outstanding debt, and it just keeps getting more and more abysmal for the entertainment industry. We are not out of this pandemic. I don't know why the stock market is making people far too comfortable. So the biggest problem and my fear with these merger acquisition companies is people are using them to stay afloat. And that is what the Golden Nugget is doing here, guys. A lot of people are insanely hyped about this, but the Golden Nugget is falling apart just as bad as the rest of the entire Vegas industry. And I don't know if you guys have ever seen the owner of this company, but right now he is taking out massive, massive debts. I mean, we're talking about debt loans that are at 15%, and we're talking about hundreds of millions of dollars. Texas billionaire Tillman Fertitta, if I'm saying that right, is looking to raise more debt to keep his casino and restaurant empire afloat through year end. If the CV shutdown persists, the offering is ending nearly 1 month drought in the market for risky corporate loans. The business is offering potential lenders an interest rate of at least 15% to participate in a $250 million loan for his Golden Nugget casino and hundreds of restaurants under the Laundry Inc. umbrella that have been just ravaged by the CV, according to people with knowledge of the matter. Now, this is a company that also owns the Rainforest Cafe and a lot of other things going on there, guys. So they're taking this merger acquisition as basically a way of raising money for their online casino, which, by the way, the contract for this merger acquisition basically states that at some point, if the company can't afford the revenues, they end up owning a massive chunk of this. There's so much convoluted stuff going on that this could never happen with a legit company trying to go to a public market. And this is another one of those big fears that comes behind these merger acquisitions is, again, they can bang out quick dollars and just dip. And it just seems to be one of the fears behind why people have been investing in, all these merger companies. Be aware, because I do not want you to get caught up in a pump and dump. If you are buying these stocks, you have to approach them at the most speculative level and try and get in cheap and try and get out at a good price. I'm just telling you guys, the majority of these are going to flop, and I would still rather stick to my philosophy of just owning a small handful of insanely good companies here, as I haven't even updated my entire stock portfolio here yet, guys, but I'm sitting on $167,000 today, meaning my portfolio is up over $30,000 year to date, which is something staggering, but it comes from the passive idea of investing. Buy the best companies, don't trade them, hold on to them forever, and make a crap ton of money while you sleep. So I don't know why everybody wants to chase the hard money, because again, you guys aren't throwing real money in this. I mean, I haven't seen anybody really throwing hundreds of thousands of dollars into Nikola. People take on these little speculative bets, they make $1,000, $5,000 here or there, and then they just bang it out and leave. And at the end of the day, guys, that's the kind of vibe that those companies have. So I'm going to continue to invest into my 15 companies, and the only speculative stock in my portfolio is MindMed. And of $167,000, I have $1,000 in MindMed, which is less than 0.4% of my entire portfolio, and that is all I'm comfortable for taking on risk when I know Facebook, Microsoft, Apple, Tesla, they're companies that are just going to keep spitting cash. And I'm going to ride that train until I retire, folks. So I'd love to know what you think about all this in that comment section below today. Stay cool, stay awesome, and I look forward to chatting to you tomorrow.